Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our 21 SPY and ES mean reversion systems, one of which is in a trade actually right at the moment. And of course our KISS trend following systems, nothing like it out there guys, in the systems section under KISS STS tables. Anyway, it's been since last week since I've posted a YouTube video. Steve Nelson did the extensive weekend newsletter. And if you're just following on YouTube, you should consider becoming a subscriber to Breakpoint Trades. Then you can see all of our updates, get alerts to our system, signals, etc. Play our trade ideas, ask us questions. Anyway, let's go ahead and get started for this update. Again, this is our back-end recording for our standard webpage newsletter. I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, September 18th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. Again, the same general theme as I always keep. Otherwise, key events for this week. Again, we discussed this on the weekend newsletter. Building permits, housing data on Tuesday. Obviously, the FOMC and rate decision on Wednesday. Initial jobless claims, home sales on Thursday, and PMI on Friday. Now, as far as the market, I think we've done a really good job about calling the market, even short term. So coming into last week, we favored an up move in the market, which we got until Thursday. About on Thursday, the market S&P had rallied right to the top of the range. We've been showing the patterns, indexes, and potential coil patterns. So it was right up there at the range. A lot of people were bullish because of that big move up during the week and on Thursday. We were actually bearish because, why? Price had rallied right up to resistance, right at the top of a coil pattern. And that's where it sold off from strongly on Friday. And then on the weekend, despite Friday's weak close, we were looking for an up move on Monday today, which we got at least half the day, then we pulled back. And right now we're actually looking for a little more upside tomorrow because we had a bullish little break in structure and we could count 5 waves up. Again, I'll show you all those short term. I was going to discuss some of these systems, one of which took a long trade on Monday, the SPY trend pullback, and I issued that trade alert pre-market today. Anyway, let's get started here. So item number 2 below shows the index sector table what transpired today. You can see major indexes just barely up. Again, they were up pretty nicely midday before the market had pulled back. So it lost most of the intraday gains. The Russell, of course, still remains super weak. Remember, the daily has sort of a slanted head and shoulder pattern. As far as the 21 market sectors we follow here, kind of a mixture of up and down here. More down than up, obviously, but some strength in the energy area, bouncing back a little bit. Semiconductors, technology, otherwise weakness in banks, transports, real estate, consumer discretionary, biotech, etc. Currency-wise, U.S. dollar down 0.17%. And one thing I'm watching on the yen, guys, it appears to be in a falling wedge. FXY would be a way to play along there. Again, we'll discuss that further in the video newsletter. Cryptocurrencies were mostly up today, though the stocks were down like Mara, Riot, etc. Commodities, kind of a mixed bag here. The index was essentially flat, down 0.04%. Crude oil was up 0.6%. That's holding up. Natural gas rebounded, up 3.2%. But remember, it's stuck in a big range that it's been stuck in the last 6 months. Copper, agriculture, corn, wheat down. And coffee, which I showed last week nearing a support, had a big rally, up 3 3/4%. Precious metals to the upside, gold, silver. The only thing that stands out here, again, this is just for today, GDX was only up 0.1%. Gold was up 0.6%. You generally want to see GDX lead, but again, that's one day. The miners have been leading over the last couple of weeks, and that has helped this area. Bonds today, the 10-year, 30-year were down slightly. Next. Item number 3 shows the economic news calendar, which I already discussed. We have the CPI, PPI this week, again, which I already discussed. Like I said, the big one obviously is the FOMC on Wednesday. We have the initial jobless claims, natural gas inventories on Thursday, and of course, PMI on Friday. All right, let's go ahead and move on. Let's talk about our mechanical trading systems. So, this image here shows some of the mean reversion systems that we run for SPY and ES. We have 22 systems, 21 of them are mean reversion. And on Friday, the trend pullback did a first entry. But as I already discussed, on Friday afternoon, I had to leave just before the market, and I wasn't able to send that trade alert out. By the time I got back, late Friday, market had been closed a couple hours. SPY was still trading after hours, but I figured really no one would be around to take it. So I elected to instead send the trade notification for this system pre-market today. So the trade is now live on the website. SPY, the trend pullback system can have a maximum of 3 entries. Last time it did a trade, the first one was obviously too early. It was a loser. The second 2 were winners. So it remains to be seen how this trade does. If the market does have a wave C pullback, like a zigzag, then this may need to take another 2 or 3 entries perhaps. If the market's more of a shallow pullback or a coil, then it may only need 1 or 2 entries. We'll see. Let's take a look at the statistics for this subsystem. So image number 5, here's the statistics. So you can see system has a profit factor of 11. The trade history goes back to 1995, so pretty long. 201 total trades, 85.5% winning trades, 36 consecutive winners, 2 consecutive losers, decent profit curve. So anyway, like I said, I issued the official trade notification today pre-market to take SPY at the open. Next, let's image number 6. So here's the live SPY mean reversion systems trades this year that I've emailed out to subscribers. I condensed the table to a 2023. Remember, I had both the 2022 and 23 all in one huge table. It was getting just too tall to manage to take a screenshot, so I separated them into the years. Again, unlike last year during the bear market in 2022, obviously a lot less trades this year. Last year we had something close to 100 trades in that high volatility, which is typical of mean reversion. And bear markets, high volatile conditions, you get a lot of triggers, which is cool. This has not been a bear market this year, and so there's been a lot less trades, been about 24 trades. Again, still respectable, especially if you followed them. Not all of them winners. Overall, you're up collectively. And here's the open trade up here. Looks like I got a little typo here. This should say pullback trend, but it was the first entry. I took the prices at the open, which was 443.05. Next. Image number 7, here's the SPY mean reversion systems for last year, and you can see how many of them there were. There was actually 62 trades last year. So right now we're at 24 trades this year, so obviously a lot less than last year, but overall they did very well. And you can see here. Next, image number 8, here's the mean reversion systems that have triggered on ES or MES futures. There's been 26 trade signals this year. Again, last year there was, 70 for 2022. So a lot less this year, but it's done very well, as you can see. If you took the trades this year, all of them, and this is with MES futures. Remember, that's the micro ES contract, which is 1/10 the ES mini. Again, you can also trade or substitute the ETFs in place of, if you don't like to trade futures. Whatever works for you is what you should do. Okay. Anyway, if you did the MES here, you'd be up over $5,000. The last trades were pretty big. We had some really nice trades there. Last ones occurred in mid-August, and they closed out nice winning trades, $1,700, $500, $1,000, etc. Again, guys, easily pays for the Breakpoint membership for many years. Finally, image number 9, again, as I stated, remember the KISS trend following systems. We have these KISS STS tables. These are obviously opposite to the mean reversion. They try to get into a trend, hold it, they're long only. Anyway, the point is, if you haven't set up your email for alerts, make sure to do so. Go to the KISS section, KISS tables, click on favorites. There's a little checkbox you need to click to allow email notification. If you're not a subscriber, you're not able to use this, so you should join so that you become a subscriber. You can follow whatever instruments you want. We follow 630 instruments on the KISS STS tables. So well over 100 ETFs and, over 530 stocks. So quite a nice list. All right, let's move on to the index analysis. So image number 10, here's the chart of the Dow. Again, we don't show the Dow that often. It's only 30 stocks. No changes here. Remember back in August, it bounced near that uptrend line. It goes back to the March lows. Since then, we've been chopping around. That first rally stalled at the 61.8 fib. We continue to hold that uptrend line for now. Next. Chart 11, here's a zoomed in view of the S&P daily chart. Remember, we've been talking about these potential coil patterns. So coming into last week, we favored an upside move, which we got. We rallied all the way until Thursday. We got at the upper range of this triangle coil when everyone was super bullish, thinking, oh, the market's going to rally right to new highs. I saw a lot of folks going super long that day. We were the opposite. We were very cautious. Why? Because we were up near resistance, up near trend line of a coil. That's not where you want to go long. In fact, that's where you may want to look to short. And you had a nice sell-off on Friday. And then coming into today, we were favoring an upside bounce, which we got half the day. We lost a lot of that, but we had a little bounce. Otherwise, we're still in this bigger pattern. Next. Chart 12, here's a zoomed out view of the daily S&P. Again, you can see this same coiling action. If the market were to have a stronger pullback down to this lower 4,300 area, or even this channel and the 4,200s, that to me would be an ideal swing buy for perhaps an end of year rally. Whether we get that or not, we'll see. Again, we're either going to have a shallower pullback here, correction in this coil, and then rally to a new high, or we're going to have a deeper pullback into this area. We'll see which one transpires. Next. Chart 13, here's the daily with our wave counts. Again, we've been treating this pullback as some sort of wave 4. And again, there's all kinds of different variations on here. Like I said, it could be a shallower wave 4. It could be a deeper wave 4. We'll see. But that's what we favor. The bearish view would be in red, where you form the major wave top in wave C. The last high was a wave 2, and you're eventually going to go down in a wave 3. But in order for this to play out, prices need to strongly move to the downside, and so far they're just chopping around more in that coil pattern. So we still favor the wave 4 ultimately, but the bearish scenario, you can't count it out at this time yet. Next, chart 14, here's the weekly view of the S&P. Again, shows you how in late July, where we got bearish, S&P rallied to the top of this channel, this resistance area. Just beautiful technical analysis. Pulled back, little bounce. Again, it remains to be seen if this is a wave B and we come down to the lower channel in a wave C or not. Quite honestly, I would love something like that to go long. That would give me a great opportunity to go long the S&P indexes, but you don't always get that. We'll see what happens ultimately. Next. Chart 15, here's the daily KISS trend system. Again, KISS system had a nice long from March into early August. It locked in a nice gain. It did go back long again last week. Right now it's got a wide trailing stop smart trailing stop essentially at the low there. Again, depends on what the market does here. If it's a shallower, coil, then likely this will hold. If we have the deeper pullback, the lower 4,300s or mid 4,200s, then this is going to be a whipsaw. Next. Image number 16, the 4 time frames that we like to follow with our custom indicators. So again, a few weeks ago in the mid-August, we were quite oversold there. We had a DeMark 13. Since then, we bounced and chopped around. One thing I want to point out here is the half-day chart. So the dots here, this is our cycle indicator. It's a very good, it's kind of an Elliott wave type thing. It's pretty effective. But price has been following the cycles. So the magenta is the resistance cycle, which we pulled back from a couple weeks ago. You can see we had the A's there. That's amateur buying. So that was toppy. We've held the ATR here. We had a support cycle last week, which we bounced from, then a resistance cycle we've pulled back from. So price is really following this. So we're going to be tracking this. And the 78-minute price has been following this pretty well too. You can see price bounced from the support cycle to the resistance cycle where the ATR and pulled back to the support cycle. We also have a support cycle on the 130-minute. Next, chart 17, moving back to the traditional charts. Here's the half-day chart again. Right now, I just have a clean channel here. So far, bounce attempts have stopped at the downtrend channel line. Moving average ribbon is very pinched here, so energy is building, which makes sense. We're kind of coiling here at the moment. Next, chart 18, here's a 60-minute view of this coil. Again, this is the pattern we showed last week, which played out. The rally into last Thursday, that's why we got a little bearish there, because we were at the top of this coil and we've sold off nicely, but we're still in the pattern. Next, chart 19, here's a 30-minute chart. Steve showed this on the weekend, so a couple options here. Wave A, B, C. Okay, if C were to be a zigzag, could be shallower too if it's a coil. The bearish view would be 1, 2, and then 3. Again, you can see we were favoring an upside bounce coming into the day. We have a little break in structure here, so we're actually favoring a little upside bounce. If we get one tomorrow, watch this area. That could be resistance up around this trend line. Next, chart 20. Here's a 15-minute chart. I'm going to remove this. Let's move on. Chart 21. Here's a 10-minute view. This indicator here, it's a kind of a nifty indicator. It's the zigzag. Again, we talk about these break-in structures when you take out a previous lower high or higher low. And you can see, today we took out that last lower high. That was a little break-in structure. Then we pulled back. But because of that bullish break-in structure there, we're looking at a little higher low here. Maybe a rally up tomorrow. We'll see. Markets usually hold up into the FOMC, so we'll see if that's the case. Finally, chart 22 is a 5-minute chart. Now, here's another reason why we lean upside here in the short term. Besides that break in structure here, where we took out that last lower high, notice you can count little 5 ways up here. So because of that, we're looking for a higher low here and then another move up. We'll see if we're right. Next. Chart 23, here's the triple Qs. Again, just like the S&P, they're in this coil. And you can see last Thursday, they got to the upper portion of the coil. That is where you needed to sell, not buy. Okay, now we're near the lower portion of the coil. Is that where you sell? No, that's in fact where you can go long with a tight stop. Next, chart 24, here's another daily chart. You can see that perfect break in this trend line break, back test where we found resistance. This represents symmetry. If we were to get another big sell-off, this could be a target area, perhaps. Next, chart 25, here's the half-day chart. Again, it shows you this coil, and this is a demand zone here if we break the coil. Next, chart 26, there's a 30-minute chart of the triple Qs. Again, broke down, rallied up into this little supply zone. Ultimately, over time, I do think price is going to work down into this demand zone. Oh, one thing I want to mention on the S&P, guys. Actually, never mind. Let's move on. Chart 27, here's the KISS trend system. Again, KISS trend system had a great trade from early March to early August. It did go back in long a couple weeks ago. Still, it's managed to raise its stop 2 times from 354.70 to 360.90, 361 if you want to round it up, which is still below the entry, but it has been able to raise its stop slightly. Next, chart 28, here's the 4 time frames. Similar look to the S&P. Again, just like on the S&P, this half-day chart price is really following this cycle indicator, so going to keep an eye on that. And of course, it's holding the ATR. Same for the 78 minute. It's really been responding to these cycles, so I'm going to keep an eye on that and give you updates when I see them. Next, chapter 29, Apple, crapple. It's one reason the market held up today well. It was up, though off the lows. Again, ultimately, I still think Apple will likely test its 200-day moving average, but for now, it's bounced a little bit. Definitely was a great short at that wave B, which I favored several weeks ago. Next, chapter 30, here's IWM small caps. This index was down today. It just remains very weak. Again, it was an excellent sell or short signal up there at the top, testing the top of that resistance pattern. We had 5 waves up, and it's been weak here. So again, sort of has a little slanted head and shoulder pattern look, doesn't it? Chapter 31, there's another view, shows you that slanted head and shoulder potential. All right, guys, that does it for the major indexes. Again, we'll see what happens over the next couple days. Let's move on. Look at some indicators. Here's the VIX. So last Thursday, when the market was up big, the VIX had fallen all the way to this big support area. You can see the support's been building for the last 3 months, and we bounced off of it. Next, chapter 33, there's a 60-minute chart we're going to monitor. We broke the little downtrend line, back testing it. Chapter 34, there's a weekly view of the VIX. Again, you can see this big area down here is big support going back for years. So that's why the VIX has been trying to base in this area. Next, chapter 35, here's the NYSI buy and sell system, the weekly. Again, this never gave a buy signal because you needed to take out the high of this NYSE candles. And so we need to now take out the high of today's candle. Now, this hasn't updated today yet. It still shows September 15th. Stock charts, some of these indicators update late, a couple hours after the close. But that's what we need for a trigger buy, for this to go over this little line. Chapter 36, here's the SPX versus the S&P. Again, you still have this divergence here where the BP SPX lower low, higher low on the S&P for now. Chapter 37, there's the BP SPX system with the 2 moving averages. That's where you get your buy and sell signals. So again, you can see how you had a nice sell signal there in early August when this crossed below the moving averages, but the 2 moving averages did not cross up recently either for a buy signal. Moving on, chapter 38, here's high yield corporate. It still holds in here, and that's still a positive for the market. If this holds up, markets tend to follow this. It's risk on. Chapter 39, here's TLT 20-year bonds. Little breakdown last week, nice bounce back. I am still favoring a higher low here just because of this symmetry break. That rally off the lows was $4.81. Clearly the largest rally in the downtrend since the April highs. Next, chapter 40, here's the 10-year Treasury yield on the daily. Again, you can see it was up initially today, got near this resistance up here and pulled back. So logical area to pull back a little bit from, but man, longer term, guys, as I've been saying, this has like a cup and handle look and could eventually break out of here in a big way. Next, following up on some individual sectors, here's XLK technology. Little bounce back today. It's still below these moving averages though. Chapter 42, here's transports. This remains very weak, as you can see. We showed this little rising wedge a couple weeks ago, which has played out. To me, it looks like it wants to tag that 200-day moving average over time. Next, let's look at a subcomponent of transports. This is the airline index, JetBlue. And look at JetBlue. Man, this has taken the worst brunt out of the airlines. You know, this essentially been shaved in half from just a couple months ago, from the July highs, now down to 469. And it still looks ugly. Look at this, no divergence yet. Well, there is none on the MACD. There is some RSI divergence here, and it is certainly very oversold, but man, what a haircut. Chart 44, XLF financials, they're still holding up fairly well here, still in the same little pattern, little channel. Chart 45, healthcare. So far, it's trying to coil here. It bounced off the bottom portion of the coil. Chart 46, home builders could be potentially forming a coil. It's basically at the bottom of this trend line. Chart 47, XRT retail. This looks weak. Kind of has a slanted head and shoulder pattern, doesn't it? That shrinkage is not helping these companies. All these flash mobs, these people, taking things and no one stops them. It's just crazy. Chart 48, XLE Energy. Obviously, this area still holds extremely well. Still holding that 9 EMA. Chart 49, here's the bullish percent energy index, BPDR. No changes. It's still stuck up here near 96%. Has not given a sell signal, but it is in very overbought territory. Again, easy buy, swing buy was back there in June when this was in the oversold territory. Chart 50, here's ERY. That's the 2-time leveraged inverse ETF. If you're looking for a pullback in energy. But like I said, this potential little 5 ways down. But until this can have a good confirmed close above the 9 EMA here, it's still in a strong downtrend. It needs to at least break and hold this 9 EMA. Again, if you're long here, just put a stop at that low, but the lows on this are not confirmed. Chart 51, moving on to commodities, here's DBC. Again, it's had a heck of a run from that 200-day moving average retest and from that falling wedge break. Little pullback today. It's had a heck of a run. Chart 52, here's DBC on the weekly. Nice rally from that 200-week moving average. These moving commodities are not helping Powell out on his inflation battle. Chart 53, here's the monthly. Again, long term, guys, to me, this is a super bullish ABC pullback over the last year. And, I think this is going to go to new all-time high. Not new all-time highs, but I think it's eventually going to take out the 2022 highs. Next. Chart 54, here's crude oil, up yet again, but again, it's getting quite extended here. Notice your RSI, notice your moving average ribbon, it's pretty expanded, but again, it's still holding that 9 EMA. Next. Chart 55, here's SCO, that's the inverse ETF for crude oil if you're looking for a pullback. Next. Chart 56, natural gas, like I said, for the last, 6-7 months, it's been in this base. Bounce back today, but overall it's just in this horizontal basing pattern. Next. Chart 57, copper, down today. You can see it's in this big weekly coil pattern. Chart 58, DBA, weekly chart, down. It's had a nice run up this year, but down a little bit today. Chart 59, uranium. This sucker's had a heck of a move. It was down initially today, but closed back in positive again. It's now outside its upper Bollinger Bands 3 consecutive days. RSI 14's at 81%. 5 RSI's at 93.5%. So it is quite extended here, but it is a very strong stock. I view a pullback, it's just some sort of fourth wave. Chart 60, here's the monthly view of uranium. Again, just textbook bullish. Started its bull market run in 2020, had its initial up leg. Then it spent the last 2 years in a consolidation pattern, lighter volume, moving average ribbon pinching, RSI 14 breaking above 50, holding it as support, and it's broken out the last 2 months. Again, if you're willing to give this room, I think this could eventually go into the upper 30s or higher if you're willing to give it room. Finally, chart 61, here's coffee. The previous week I showed this weekly chart on coffee. It had come all the way near this long-term support. You can see it's been resistance, turned support. Nice bounce from there. Chart 62, Bitcoin up today but off the highs. Chart 53, Bito. Again, off the highs here. Little black candle stalling at some resistance here. Chart 64, Mara. Remember, I've been following this one. It's been tagging the 200-day moving average, which was my target. It's been finding support there now. You do have a MACD divergence, but I don't really see a buy trigger yet. So I'm going to monitor that. Chart 65, there's the 2-hour view. There is some divergence here on the MACD at the moment. Next, Charber 66, UUP, US dollar ETF, down, like I said, down a little bit today. Charber 67, US dollar index, up into this supply zone. We'll see if it can finally pull back into here. A pullback in the dollar would definitely help the precious metals area. Next, Charber 68, Japanese yen. Remember, I've been showing you this falling wedge. You have MACD divergence. So this does interest me for an eventual bounce. Still in the pattern though. Another way to play that would be FXY. That's the ETF. You can see the same pattern. Next, Charber 70 gold up today slightly. Again, you can see potentially forming a coil. So far, it's bounced off the 200-day moving average. Again, lately the stocks have been leading. You can see that on a ratio. Today they didn't lead though, but still looks okay. Charber 70, there's the daily chart of silver. Again, basically just been range bound in this pattern. Been better to sell. Upper resistance, buy support. Charber 72, there's the weekly chart. The bigger picture, you essentially have a big coil forming. Charber 73, GDX, the gold miners, up slightly today. Again, overall still in this downtrend channel. GDX did bounce off of this demand zone here, but so far you only have three waves here. So it could just be a zigzag wave 4. We'll see. For the bullish case, it would need to really break out of this coil and impulse. Next, Charber 74, here's the BPGDM system. Again, I said to monitor this. This still is not given a buy signal. The BPGDM is right on the 8 moving average. You need to see it curl up here, but it is an oversold territory. Remember when it gave a sell signal back in late April? Over 75%, it was overbought. Let's take a look at some individual precious metal stocks. Charber 75 SA. I posted this last week in a falling wedge. Must have been news on this. Big pop today, good volume. And you can see on the ratio, nice confirmed buy signal. Next, Charber 76 SVM. It's a silver stock. I think they mine gold too, obviously. Again, it doesn't really matter to me. I've been showing this as a falling wedge. It did break out last week. A little pullback today, but pattern looks good. Charber 77 DRD, another precious metal stock. Still in this channel. It's around the 200-day moving average here, so an area to monitor. Charber 78 Newmont. This is the largest component of GDX. So it has rallied off the lower part of the wedge. So again, it's been more of a, it's been a kind of a small move, but it has rallied off of there if you took a shot there. Finally, Charber 79 OR, another precious metal stock, mining stock. It's rallied to the top of this channel. That's resistance. We'll see if it can break it or if it sells off. All right, guys, following up with normal trade ideas. Charber 80 ACHR. It's been on the list here for almost 2 weeks. It's still in a coil here. It's still holding the coil. In fact, down here it could be a low risk area to maybe take a long with a tight stop. But I'm going to keep it on here unless it breaks this coil to the downside. Charber 81 Arch Coal. This is at a hell of a move. Okay, look at this puppy. Now, again, it's very extended short term. Look at that moving average ribbon, very expanded. Doji candlestick outside its Bollinger Bands for what? 1, 2, 3, 4, 5 consecutive days. That's quite a bit. Charber 82 CRS at a nice pop. Remember, this is a long idea of mine over a week ago. Nice pop. Hope you took some profits on that shooting star doji last Thursday. Charber 83 Farm was a nice long idea of mine last Monday. Gave a nice pop, as you can see. Hope you took profits at the 50-day moving average. Charber 84 BPT, like the website, was another long idea of mine last week, which is played out for a trade. Charber 85 BRKR, another long idea of mine from early last week that did give you a trade off of that high, but if you didn't take your profits late last week, you gave it back. In this type of choppy market, guys, take some profits. Charber 86 SAR. Here's one, it's still a valid pattern if it can take out this resistance area. Charber 87 XLRE, still kind of monitoring this one, more just chopping around. It's a good short if it loses this lower trend line though. Charber 88 Alcoa, bounced off that support last week. If it loses the support though, it could be a short. Chart 89, XPO, another one in this pattern near the 50-day moving average. Again, it could be a low risk long there with a tight stop or a short if it breaks that pattern. Chart 90, REGN, still looks okay here. Chart 91, here's a new one, SVRA. You had nice volume expansion the last 2 days. You got clean resistance here, essentially right at 386 would be my 387 would be my long trigger. Chart 92, the final one, Fate. Nice volume today, breaking out of a little wedge. You have a little RSI divergence, MACD divergence. This is one to watch, see if you get some follow through tomorrow. And that'll do it, guys. We will see what happens. And quick check on futures. ES futures are up 3 points. So not a lot of movement. We'll see how it opens tomorrow. Have a wonderful evening. Take care.